Let's start off with the fact that we saw markets closing on a flat note in yesterday's session. We have seen a few losses coming to the fore over the last couple of sessions. Do you think that investor sentiment is starting to turn to the negative, given that we've seen so many gains coming through over the last month? Also, apart from that, also just keeping in mind we're getting quite a lot of company earnings filtering through. Do you think that is going to be pushing the markets higher from these levels?
Thank you very much, Eleni. It's a joy to be here this morning. Definitely, as you noted there, we've been seeing a bit of a sluggish behavior in terms of the rally that we've been seeing in the market. Corporate actions are still very strong. We're still seeing companies announcing relatively good performances. But noting one of the things that was a bit of a concern was the end of the month cash crunch, as well as profit taking, which we are seeing a lot of investors doing because they are not certain about the direction of the market as at now.
Just looking at some of the talks that is going on, mergers and acquisitions, housing finance and equity bank, any developments on that front? Because we know housing finance came out with some strong numbers, in fact an increase of 50% for pre-tax profits. Apart from that, we know it is looking relatively expensive, a PE of over 20. How are investors viewing this stock?
The stock is still fairly speculative, and the demand on the stock is still very high. We are seeing the share price continuing to rise marginally, and looking at how it is behaving going forward because of the good performance and also because of the talk, especially in terms of equity. The merger or acquisition or hostile takeover is making it very, very speculative, and the behavior on the ground is showing that investors still have a lot of hope in terms of housing finance going forward.
Looking at Safaricom, we know that they are trying to oppose the new regulatory environment, which is starting to take shape in Kenya. And it seems that government is starting to assist the smaller companies in the telecom sector. And Safaricom, of course, is worried about its market share. Do you think that it's going to be quite a big dampener for Safaricom? Or do you think that the product offering that Safaricom gives to Kenyan consumers is going to keep it in good stead?
Well, thank you very much, Ellen. That's a good observation about Safaricom. Well, looking at it in terms of the broader picture, Safaricom has a lot of stakeholders. The government owns a bit of Safaricom. Telkom owns a bit of Safaricom. It is a listed entity in our market. So because of that, it seems to have a lot of shareholder base and shareholder support. And at the moment, Safaricom is in a bit of a tight spot, mainly because of it seems to be suffering from its own success. Because basically, since its inception, it has been growing significantly. It has been able to maintain a very strong market share in terms of over almost 80% of the market share, and because of that there's a strong concern about how it is performing, and especially in terms of its competitors, and because of that they seem to be winning in terms of it being curtailed in terms of how it is growing. And for Michael Joseph, it's a bit of tough waters to be able to ride in, but he has been able to demonstrate very strong management abilities, and I'm certain that he's going to be able to still steer Safaricom through this. The only hope right now is seeing how it can be able to still take advantage of the options it still has with it, especially in terms of its product offering and also customer loyalty.
Government is also making a move on the insurance sector, and this is now impacting Kenya reinsurance. Obviously quite a big threat for this company going forward. How do you think it's going to impact the insurance sector as a whole, and do you think it's actually going to be positive for consumers but not so great for the companies in Kenya?
Well, that's a good observation there about Kenyari. We have been expecting the cessation to come, and the challenge has been on Kenyari to be able to strengthen its base, and as well as also try to ensure that its bottom line is performing excellently, and also in terms of how it can be able to still maintain the confidence of the local insurance firms. And that can either be a positive or a negative, but as at now, looking at how the firm has been performing historically, it's a bit of a concern because it hasn't been able to really sustain, and even the share price has not been able to rise marginally compared to its IPO price. And because of such factors, as at now, we're going to be looking significantly at the management to be able to see how they're going to be able to still steer the company in terms of profitability. But I see it lobbying to be able to see whether the cessation can be able to be extended so that it can be able to sustain their business performance.
Samuel, we also have KenolKobil gaining ground in today's session. We know it gained 7.7% in yesterday's session. There are rumors about a share split. What are you hearing on the ground?
Well, on the ground, we've received some corporate action on KenolKobil. I guess there could be a share split in the offing, and because of that, we're seeing a lot of demand on the share. Well, in our market, there seems to be a lot of interest in such corporate actions like bonus issues, share splits, and because of that, especially in terms of pricing, we see a lot of these stocks rising significantly because of speculative demand, and because of that, the share price has been going up. Even today, we saw it significantly rising, and the demand is very strong. And as investors continue digesting such an announcement, definitely we're going to continue seeing it rising.
Turning our attention to those banking stocks, we've seen first quarter results out of quite a few companies. Do you think that the trend is likely to continue? Because we have seen some good numbers coming through from the likes of KCB, HF, and of course Equity.
Well, looking at how the banking stocks have been performing, especially in terms of the way they are rising, a case in point is Standard Chartered Bank, which is almost touching the 200 shilling mark, which is an all-time high. Definitely, the sentiments on the ground is that banks are going to be performing very well, especially some of these mainstream banks who are not very keen about expanding, especially last year, like Standard Chartered. And because of that, the quarterly performance is going to be favorable for them. And with the double-digit growth and double-digit performance, well, definitely going to be able to be very positive for some of these stocks. And the speculation on the ground seems to be reflecting.